Yeah, good morning, everyone. Yesterday we saw US market again correcting, and in last 5 day, US market is corrected by around 10% and trading in oversold zone. In expectation of that, the Fed will increase interest rate at higher than the expectation of around 0.5%, which was there earlier. This all got triggered mainly because of the higher than expected inflation which came in the US, and that has kept the sentiment in the higher interest rate zone. So market, some participants have already started factoring in higher interest rate increase in this policy meeting of around 0.75 and continuing higher interest rate increase even in the next policy meeting. So, but the market is, I think, well factoring in all these negativeness, and 10% decline in five day is substantially higher. So, likely to see bounce back post the event. Uh, Futures are marginally positive in the US market, and Asian markets are mixed. Half of few of the markets are positive, like Hong Kong, China, but other markets like Japan, Korea, and Taiwan and all are negative. So mixed reaction from Asian market. Whereas if you see the commodity oil is at 121. If we see yesterday same time it was at around 121, but during the yesterday's day, the movement was quite wide. It went up as high as 125, also declined to 119 as well, and now more of a flattish as compared to last yesterday's same time. Apart from that, the other commodities are also indicating mixed reaction, whereas Australia aluminum is up by around 1%, copper is down by around 0.5%, iron ore is up by around 0.5%, and steel is down by around 0.5%. So more of a flattish to marginal positive signal from the international market. We are also holding up some crucial technical levels, which technical team will talk. And if suppose we continue to hold that, then some positiveness in the near term. Now, I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Today, Nifty is likely to open on a flattish note, and we might see some range-bound trading session. Yesterday, we witnessed that the Nifty has just quoted a low of 15,660 at around levels, and from there onwards, we have witnessed some sort of a pullback rally, and which helped Nifty to maintain a closing above 15,700 level, which gives some sort of a relief sign. Now today, 15,800 will act as a crucial resistance level. If Nifty manages to maintain a closing above 15,800 level, then only we can expect some pullback rally, which might take a Nifty towards 16,000 to 16,200 levels. Whereas on the downside, 15,700 to 15,670, these 30 points will act as a crucial support level for the Nifty. If Nifty breaks 15,670 level, then again we might witness selling pressure into the Nifty. Which might be witnessed selling pressure, which will take the Nifty towards 15,600 to 15,500 levels. So the overall view will remain a cautious. These levels we need to keep an eye on it on the closing basis. Accordingly, the trend will be decided in the market. So as long as Nifty sustains above 15,670 levels, pullback rallies, small pullback rallies can be witnessed towards 15,900 to 16,000 levels. Coming towards the bank Nifty, we have seen a huge selling pressure into the bank Nifty from the last almost 10 to 12 trading sessions. As of now, Nifty has a cluster supports at around 33,000 mark. Yesterday, we have seen that the bank Nifty quoted a low of 33,185 levels, and from there onwards, we have witnessed almost 200 points rally, and which helped the bank Nifty to maintain a closing about 33,370 levels. Going ahead, for the today intraday purpose, the resistance is placed at 33,500. Any move above that level will take a bank Nifty towards 33,700 to 34,000 levels. Whereas on downside, the first immediate support will lies at 33,200. Any move below that level, 33,000 levels can be retested once again into the bank nifty. So we will remain cautious on the nifty and the bank nifty too. But small pullbacks rally cannot be denied as long as it holds our mentioned support levels. Coming towards the Nifty Finance for today intraday purpose, 15,200 will be the first resistance level. Above that level, 15,320 levels can be seen. Whereas on the downside, 15,000 and 14,920 will act as a support level for the Nifty Finance. Stock specific, Pidilite industry looks really good at the current levels. We are witnessing that this particular stock is just trading near its 20 DMA. I believe it has the potential to reach up to 2,200 levels on the high side. So one can take a long position into Pidilite at CMP. Stop loss can be kept at 2,100 and then hold their long positions. I think that's it from my end. I request derivative teams to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, looking at the overall open interest, a good sign is, the open interest has decreased in the last 2 days by about 10 odd percent, which is good. Also, we are seeing, the pace of rally or the downward rally is decreasing. That is another good sign. The VIX has decreased as well to 21 odd. The PCR is near the oversold zone. So all in all, we are getting some good data now, and also with Nifty around the 15,700 levels, which is an important support level. We can witness some amount of bounce going forward. So maybe another day or two it might take in between this range, but we can witness some good bounce now going forward. So in the next couple of days, look to buy instead of short. So that would be a good strategy for the next few days. From the stock specific front, we believe the stocks which have witnessed some good amount of selling can witness some buying. So especially the cement sector, it seems like a short-term bottom has been made, and it is now in place. So definitely some amount of bounce can come in there. In Ultratech, Grasim, Dalmia Bharat, these are the stocks one can focus on. From the banking space, not every stock will bounce, but there are some stocks which can witness some amount of bounce, like Bandhan Bank, ICICI Bank, and HDFC Bank. These stocks can witness some amount of bounce. However, from the banking space, whatever you buy, we suggest to book profits in intraday itself or close positions in intraday itself, because the longer term trend still continues to be negative in banking. So do not hold positions overnight. That would be the view. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Bajaj Auto had informed the stock exchanges on 9th of June that its board will consider proposal for buyback of shares. However, post the board meeting yesterday, Bajaj deferred the buyback proposal, citing further deliberations required in order to take a decision. After this announcement, the stock has already fallen by 5%, as it was holding up well last week in anticipation of a buyback at premium to current price. In other news, Ashok Leyland's subsidiary Switch Mobility, which is into business of electric vehicles, it is looking to raise $300 million. The company is planning to invest around 1,000 crores from this in a facility in South India. The current order book of the subsidiary Switch Mobility is 600 electric buses. Company believes that this market will grow by 10 times in next 2 to 3 years. Also, we recently heard, I think last couple of weeks, that all over India, total of 50,000 electric buses tenders are likely to come up, which will be executed over next 5 odd years. So overall, the positive for electric bus space, and Ashok Leyland being one of the leader in this space, it is positive for Ashok Leyland. Many crops are being sold at prices higher than their MSPs, like wheat, cotton, soybean, groundnut, sunflower seeds. And if we just talk about wheat, then wheat farmers alone are expected to have earned an additional of around 6,000 crores this year compared to what they would have earned had they sold at MSP. So this will be positive for tractor companies like Escorts, M&M and VST tillers. Uh, Also, yesterday, CRISIL held a webinar on specifically on NBFCs, and they said that the rising interest rate cycle will lead to shrinkage in net interest margins, especially in the case of NBFCs which are doing fixed rate lending for products like vehicle financing and MSME loans. So because the lending rate is fixed in these products and their cost of deposits, cost of funds will rise at a much faster pace, they will only be able to pass on the increase in cost of funds to the new disbursals and not to the existing loan book. So that will lead to shrinkage in their NIMs. With the intensity of rate hikes that we are seeing, we will see in this year, it is possible that we could see a steep decline in the NIMs of vehicle financing companies. That's it from my side. Thank you.
Yesterday we visited the plant of Aarti Drugs Limited, and the key takeaway from the meeting with the management is that revenue can grow at CAGR of around over 15% in next few years. Apart from that, that will be driven by mainly the fresh capex which they are continue to do in last year and still continuing in the current year as well. Apart from that, the key thing which will be driving the growth or profitability in the coming period is the improvement in margin. If you see, their margin has come down to around 13%, mainly driven by higher raw material prices, and which is leading to decline in the margin. Normalized margin for the company is around the 15.5 to 16%. So that can be reached in very soon once the prices stabilize. And the management comment about the price is that the prices of the commodity are now stable since March and not seen further hike or not even seen decline as well. And the company has taken price increase in a few of the commodity of their selling prices in March month. So that will start benefiting in somewhere in Q2. So Q1 may remain, margin may remain bit subdued, but from Q2 onward, margin should start showing good improvement. And this is on the regular business side. But apart from that, the new development is that the specialty chemical which the company entered around 1.5 years back is showing good sign and good margin in the business. And that business is likely to double in next 1.5 to 2 years. And there the margins are much higher as compared to the company level margin of around 16%, whereas the specialty chemical margin are somewhere around 25%. So that will support the margin for the coming period. Apart from that, if you see the other driver for the margin expansion from here onward is one of the plant is under import alert of the US FDA. And that plant company has made it ready for re-inspection. In last 2 years, the inspection was not happening because Fed was not visiting here. But now company has taken various initiative to streamline that plant. And once that plant improve, then sales to US and even to European, a lot of companies are seeing US FDA in Europe as well. So the sales to European company will improve immediately. And that will drive the margin going forward from here, as the regulated margin market have a higher margin. So overall seems reasonably positive from here, wherein the stock is trading at around 15 time FY23 earning and somewhere around 11-12 time FY24 earnings. So if someone is looking at from 1.5 to 2 year perspective, the positive stock looks positive and can give reasonable return in the coming period. So overall outlook on Aarti Drugs seems positive. Apart from that, G Telefilm has not gained the digital right or the TV right for the IPL. The IPL bidding was at extraordinary high price of around 48,000 for next 5 years from FY23 to 27. And it seems like per match, the cost which has been paid by the people is combined by Star TV and Jio or Viacom 18 is somewhere around over 100 crores. So that seems very extraordinarily high, and it is difficult to make money in that perspective. So since G has lost, it seems like it will act as a positive for G shares and may see some uptick in today's trade. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.